Hello. Alright, so I'm late, mainly because I was doing manly things. I was in the middle of putting up shelves upstairs for the kiddos and lost track of time. So, I need to get a better sense of how I want to kind of do the stream. I've been using StreamYard forever. I've been a long time customer. Shout out to Bucky's. And I'll be honest, it's too expensive. If they had a creator package that was not over $80, that included just one seat, that would be great. That has everything in advanced, but it's good for one seat. I would even pay $20 less than that. But here we are. And I'll tell you what's a pain in the butt, because I have to go to each platform, because I restream to about 5. I have to go to each platform, set up the stream, redo that, make sure it posts, that type of thing. That's the one thing that's really good about StreamYard, is that they do all that for you. I'm sure Restream, I'm sure Riverside, EVMux, Ecamm Live, I'm sure they all kind of do the same thing. And there's some savings there. If I were to go down quite a bit, it'd be cut in half, which I'm probably going to do. I still have about 2 weeks left before I get charged again for. So I'm going to pause. That way we have everything saved, because we have a lot of episodes that are still saved that I probably need to download. Make sure those are all good so that we can continue on. But StreamYard, if you're watching this, hook a brother up. Okay, so today, I'm going back to streaming on, I guess it'll be 4 days a week, maybe 5 if I can figure out what to do on Thursdays. We were doing the On Air with Beacon show this time at 2 p.m. Eastern, but unfortunately we just couldn't get traction, I guess would be the word. It turned into more of a, this is how you do this kind of thing, and we already have a community training weekly for that. That's Fridays for Beat the Banks. So if you want to check that out, Friday 3 p.m. Eastern, you can check that out. And so for me personally, I just wanted a place where I could provide deep DeFi value. And so that's what today is. Today is going to be part of that stream. We'll probably do these Tuesdays and Thursdays for a little bit, because there's a lot to cover. Because there's something I'm going to be unveiling. And it's called Professor's Notes. And essentially what Professor's Notes are is, and I don't have an example for you today, unfortunately, I need to do that. And basically what it is I will be, well, I need to figure out how this is going to work specifically on Den.show, because we have the ability on a couple of platforms, Den.show being one, Juicy.box, I believe is the, or Juicy. I think it's .box, is another platform. Shout out to Moonbags, where I can create kind of like a, not necessarily a Patreon type of thing, but a place where if you hold my token or a specific amount, or if you want to pay a specific amount, you'll get access to all of these things. And the idea is that I want to feature as many great protocols in DeFi and Web3 as possible. There's a lot of just terrible, I don't want to say takes, because everyone's got their thoughts. There's a lot of really good teams in this space with good intentions that aren't getting the shine. And my hope through Professor's Notes is to find a way to bring people to more audiences. To be transparent, I would love to, work out some type of deal to advertise for certain protocols. I will disclose if that's been the case, but for the most part, this is me just going out and doing research and talking about that. Giving you my thoughts. Just to give you a little bit about myself, I am an OG in this space. I've been in DeFi since 2019. This has been my full-time career, educating and onboarding people into decentralized finance and Web3 since 2021. So this is year 5. And ultimately, the last 18 months has been about making DeFi as accessible as possible. I have an education company called Beacon DeFi, where we have free content in our free group. That's at skool.com, skol.com/beacon. You can certainly follow me if you want to on Twitter. It's just, if you're watching this now, it's at C Soriano. I'm also on Den.show, retake.tv, all at C Soriano. So feel free to follow there. Send any friends. Den.show has a fan pass that I'm taking advantage of. It's $20, I believe, a month, and that helps. That helps give me some support to continue to do this work. And I'm going to be putting some stuff inside the fan club there. I'm going to be working with them to kind of build that out and figure out how that's going to work. But yeah, ultimately, you can do your own research. Feel free to do so. But for a lot of people, they kind of still want that validation, I guess would be the word I would use. Like, for example, many of you know, if you watch my shenanigans on the variety show, which is something I normally do in the evenings, I'll stream just random thoughts, laughing with short form content. A lot of people seem to like that. Appreciate everybody who's doing that. Still working on the clip queue, by the way. That'll be up soon. Just got to lock in and do that. But I like pro wrestling. And I'll watch something, and I'll go watch and check out, 5, 6 other reviewers. Not because I know what they're all going to say. I just want to hear them say it. I just want to get their takes. And hopefully I can be that person for you too. As, hey, this is Chris's take. This is the DeFi Professor's take on that protocol, if it's good being in there. But we'll kind of pop in and just kind of show you some things. So again, for holders of the DeFi Professor coin, which is on Zora, or my streamer coin on Retake, which is also available on Den.show. Actually, no, that's using the DeFi Professor as well. Either way, if you want to support me, would greatly appreciate your support. And let me do that now. That is Zora.co at the DeFi Professor. 11 holders. Thank you guys. Thank you all 11 of you who are still continuing to hold. What we're doing here, and I need to do a little bit more uploading, is just trying to use this for the education purposes. So I have a bunch of terms that you probably should know, along with some random video clips of things that I think they're important for you to understand about being a good DeFi investor. You may also see pictures of any of my 3 cats. I don't believe I have access to live stream just yet, but that hopefully will be sometime soon. So if you want to go buy some right now, I believe once you buy 1 million of my coin, you get access to group chats, and that's where we're going to be doing more of the Professor's Notes stuff there. Den.show, there's a couple of different places where I'm going to try and set up some spots so you have some variety, but the content will be available to everybody in there. So as long as you have that, you'll have access to the group chat. And I may open up free consultations to people who are holders, that type of thing. So feel free to help make that a reality early, right? Because there's only 11 holders. So all right, let's see. Well, let's go into the research part, okay? For Professor's Notes. We're going to spend a couple of episodes specifically on base to start. I've got recommendations across 5 to 6 different ecosystems, and we'll kind of start with that. So, I normally use DeFi Llama as my main source of truth. Let me move this down. Sometimes it just depends on where I have the crop. There you go. Let me widen this. Maybe that'll make that look a little bit better. There we go. That's a little bit better. This is like the only painful thing I'd say about specifically doing this. Okay, well, I'm just gonna have to pay attention to what the screen looks like over here, because it's quite a bit different than what I have on the screen over here, which is, it is what it is. Anyway, so that actually almost looks distorted. All right. Anyway, DeFiLlama.com/chains. Good place to go. I bookmarked this. That's the ribbon right here. And so for base specifically, it is number 6, which, it's according to DeFi TVL, it's 4.43. Arbitrum's at 2.92. That's not quite correct. Bridge TVL 14.4 billion, according to this. Now, really good reference. Really good resource I would choose, and shout out to Tobias and crew over at Grow the Pie. They are an Ethereum Foundation public good, which means that, why does it look like that? Oh, fill mode fit. There we go. It was on stretch. Did not realize that. All right. Let me make me smaller, because you don't really need to see my big noggin out here half the time. Okay. And this is a really great place to go to check out information. Now, they only provide information on Ethereum layer 2s, just as a big well, I guess they do the Ethereum layer 1 now to a degree. But overall, if we go to chains, they do all of them now. Okay. Yeah, it's mostly layer 2, but they do have immutable. These are, Tycho, Alethea. That's a roll up off of layer 1 Ethereum. Elastic Chain, ZK Sync. I'll have to, we'll get them on our podcast sometime soon to talk more about this and get more of an idea on what they're doing these days, because there is a lot of interesting things here. So if we just go by Fundamentals. Total value secured. Yeah, as you can see here, 16.95 billion for Arbitrum 1, 12.68 for Base. So Arbitrum still is bigger than Base. Not by a whole lot. It's kind of crazy how much bigger Base has dwarfed Optimism, which is OP mainnet. Because Base is an OP superchain. Meaning that Base and a couple of other... all of these superchain ones, they're all based off of OP mainnet's bedrock code. So the idea is that if you want to create a layer 2, do you want to just go and create your own? Kind of how Polygon and BNB, or Binance Smart Chain to some people, did it. You can. That's going to take a lot of time. Or you can go with Arbitrum. They have their own Arbitrum Orbit stack. Same with OP, the Optimism superchain. Theirs is the Bedrock stack. And you can just pretty much create your own turnkey layer 2, which is what a lot of these groups have done, such as Ink from Kraken, Sonium from Sony, Redstone. Uniswap has Unichain. WorldNet has WorldChain. Zora is an interesting side chain there. I mean, it is technically an OP superchain, but it is based off of what's happening on Base. So, that's kind of how that works. Now, we don't necessarily look at DeFi Llama for the numbers specifically. We're looking more for the protocols. Good on Solana, by the way. Solana now has over 407 protocols. This number, not even 12 months ago, easily half. This means that there's more DeFi coming to Solana. Now, if I were to scroll down and show you all of these, you might not be able to know what half of these protocols are. So there's 400 or so, but if I just scroll down this list, you're going to see some stuff and you're like, what is all of this? These are smaller protocols. Some of them may not even actually have actual TVL. They're still, maybe they're on their way out, or maybe they're still on the way up. But there are some things here that are DeFi related that call Solana a home. They're not the only home for DeFi through Solana, but they are registered as a protocol on that chain. Now, the way that it works with DeFi Llama is that teams have to opt in to send their data to DeFi Llama, and it's to their advantage to do so, right? Especially for groups that are smaller, like Solstice, like Pump. I'm trying to see where NX Finance is here, but RateX, even Lulo, the old Save Finance. That's not Save Finance. Lulo, or Save Finance, which used to be Solend. I don't even see Save Finance on here. And some of these aren't necessarily DeFi protocols, right? For example, DFDV, which is where my hat's from. Shout out to the team there for this hat that I got in New York City. They're doing liquid staking, but they have a specific validator for that because they are the largest owner of Sol. They're the MicroStrategy, or the strategy of Solana, with regards to having a treasury strategy. Let's see. There's Solaire. Where is Save Finance or Solend? Oh, Wasabi's on Solana, eh? Interesting. Control K, Command K instead. What's Command K do? Oh, okay. Cool. That's smart. Save protocol. 141 million. 149 million. Well, where the hell was that? Oh, it's right there. 22. I'm just blind. Anyway, we're not here for Solana. We're here for Base. 773 protocols. And again, Base is 3 years old now. So it's amazing to see all of the different protocols that are on Base. So this is where I would start if you're trying to figure out how to get into Base. What are these specific protocols to go into? Don't worry about Stakehouse. They are a liquidity risk curator. But from a protocol level, anything in the top 10, then again that are listed as such, are going to be good, or ones to consider looking into. Let's call the top 20, because Fluid's here at 19, and that would be one that I would definitely consider. So we'll start with the bottom and head our way to the top. So if we start at we'll tackle VFAT another day, because VFAT has a much different connotation to many of us that are OGs in this space. VFAT used to be nothing but text, and a really great place to go if you were looking for. They were like DeFi Llama. They were a place to go on, in the beginning, BSC or Polygon, when it was called Matic, where you could go and find yield farms. In fact, when you connected your wallet into VFAT, it would actually tell you your actual APR based on which protocol you go into. It would load your wallet, and then based on the pools that were listed, it was just really just interpreting the blockchain explorer, not the blockchain explorer. Well, yeah, the blockchain explorer through the smart contract you used for yield farms. Now, game has completely changed. You really can't do it that way anymore. You could on certain pools, but concentrate liquidity, all that stuff, it's just not going to work the same way. So VFAT made a cool pivot, and now they're doing aggregation on concentrated liquidity pools across multiple chains. We'll talk about it a different day. So we'll cover a couple of different protocols today for Base. And then you can find more in-depth information about them on the professor's notes entries once they happen. This is the best way to find the website that you're looking for. Just from a security and safety standpoint, if you're going to find the correct address for a protocol, I would start at DeFi Llama. Now, what you could do is start at DeFi Llama, go to their social media, for example, if they have a Twitter, and assuming they have the check mark and this is the specific correct one, then you can go to the website from here. It should also be correct here. Now, Fluid is a DEX that's built on top of the Instadap architecture. Long time Lindy protocol in this space. Instadap, I remember using Instadap in 2020. Yeah, it's been a long time. They had an aggregator, not an aggregator, but they had an easy way to bridge your protocol, your position in Aave between ETH mainnet and Polygon. I remember that. That was a long time ago. Oh, those are different days, man. The days of the Aave incentives where you were literally being paid to loop because the incentives were so good. Those are the days. Anyway, Fluid is a DEX. Simple as that. They're one of the larger DEXs, actually. 4 billion overall. And you can do a couple different things. You can swap, or you can also help the swap by providing assets. So it is a full-featured classic AMM, or automated money market. So you've got your swap here. They have a couple new things. They have the Fluid token, and I'm guessing you can do things with this, specifically with buying the Fluid token. It's up 11% today, good for them. And you have 3 different Fluid tokens to choose from. one on Ethereum mainnet, one on Polygon, and one on Arbitrum. Apparently there's a fluid pool where you can provide liquidity for the fluid token. And really this is something you want to do if you really want to provide your support for fluid. Would you say that fluid is definitely an altcoin to consider for the next run? Maybe. I mean, look at where it was this time last year. We were looking at almost $10. So if you believe in your heart of hearts that fluid could be in that conversation moving forward, I think they're doing well at trying to combat Uniswap for more market share. They have partnered. What is wrong with my camera there? Look at that. That's funky. Oh, because my lamp is green. Fine. I don't have any. Do I have any effects on? I do have chroma key on. You stop that. Okay. Anyway, tangent. This could be a decent DCA spot for fluid. I would say there's a handful of projects that could possibly be in the running. I don't think fluid's going anywhere. Instadap is a long. Well, I guess Instadap has been rebranded to fluid. It's a great protocol. Anyway, main thing you're going to be looking for, two things. The supply. Total lending's 567 million. Total supply in liquidity 1.8 billion. So plenty of yield opportunities here. They are now also the official liquidity provider for lending for Jupiter on Solana using cross-chain ecosystem vaults. So that is really cool as well. As Jupiter builds out their JupNet, look for Fluid to be at the center of that. So really interested to see what happens there. Are these rates to write home about? They're better than you think, right? Aave's GHO or Ghost stable, 9.46 on net APR. And what this means is that there's a net APR. Sometimes there might be a performance fee depending on what protocol you're on. In this case, 9.46. You're getting paid 7.94 plus Fluid rewards of 1.52, which I realize you probably can't see. Even then. So just go to fluid.io and check that out. Same thing here with the there are Fluid APR rewards. So they're trying to juice them a little bit to get people to come in with more just more money. So there's a couple things here besides. So these are the 6 that are available. You have USDTB, which is Athena's treasury bill stablecoin, their RWA stablecoin for T-bonds, T-bills. That's at 4.85. The majority of this is on rewards from USDTB themselves. You have Lido staked ETH, and then you have regular native ETH. Native to, oh, I'm sorry, this is on ETH mainnet. Let's switch the network over to Base. Okay, so different products here. Wow, that was 9% for GHO on mainnet. Crazy. Fluid's available on multiple blockchains, by the way. It's on Plasma, it's on Arbitrum, and Polygon. USDC here at 4.31. Obvious Ghost at 5. Lido staked ETH at 2.6. EURC, which is the stablecoin for the euro. It's pegged to the value of the €1. This is on. This is from Circle, which is the same issuer as USDC. You can tell by the similarity of the logos. 3.16 for that. So if you are high on the euro and you want to use that as a base for some of your investing, consider parking it at Fluid. You're going to earn 3.16 for it. I don't know if there's other spots that have EURC as a place to park. That would be a fun little thing to vibe code, is just creating a listing app that tells you at what AMMs your assets available at. So, and that's probably something that would be very useful, to be quite honest. If I have an asset, tell me where I can go and stake it for yield. And then native ETH is at 1.06%. I'm curious as to, well, it's up to Fluid, of course, if they want to list CBBTC, which is Coinbase's BTC. So if you actually take BTC, withdraw it from Coinbase to Base, which is their layer 2 blockchain, it'll be automatically converted to CBBTC. Same thing, when you send CBBTC back to Coinbase, it'll automatically convert back into regular Bitcoin. That's their mechanism. This is their version of BTCFi. Okay, so that's how that works. Now you're being paid to supply here. This is the foundation of what we call our DeFi savings account, because essentially you have multiple ways to just stake and, not set and forget, but stake and monitor for a while, right? This will be better than what you get at your bank, even on a CD. On the borrow side, you have a couple different things here, pardon me, where you will actually okay, so they're using LPs to borrow specifically, and this is a different way to think about it. Interesting. What's this? Oh, it's almost filled. Okay, so that's what that means when these are with these specific colors. Information here for each one of these farms is pretty interesting. And as you can see, you're actually also earning some rewards here. So to actually borrow Ghost, I'm guessing, you're going to be paying 5.25%, roughly 5.25%. I mean, the rate's actually 7.25%, but because you're getting a reward APR in Fluid tokens of 2%, they're using that as, you're getting paid to borrow. So it actually takes the debt token down, the net, to 5.25%. So, are a lot of people doing this? I mean, clearly they are. I mean, this is on Base, by the way. You're seeing, total supply for ETH USDC of 5.8 million. 2.9 of that's borrowed. Collateral factor is 85%. And your liquidation threshold. So if you take a loan out, the max you can do is 85%. Liquidation threshold's at 88%. So if you actually pass this liquidation threshold because of the price of ETH, then you're going to be liquidated, and that's what nobody wants. Another way to do it also is to do the multiply, which will create a looped position. This is more of an intermediate advanced idea, but the idea is that you prop in collateral here, and then this is borrowed as debt and then looped over itself. So you're actually taking leverage at this point. The one thing to understand about this is, it's really popular specifically for correlated assets like Lido Staked ETH and ETH, or with stable coins like USR, which is from Resolve. They do delta neutral trades with the funds for USR. And USDC, there's a max leverage of 8x and you get 10%. That's actually really strong for a stablecoin position. But the one thing that people always want to talk about is impermanent loss. And impermanent loss is actually magnified by the factor of your leverage. So while this is easy ETH collateral, an LP collateral with Lido Staked ETH as debt, your impermanent loss is technically 16x if you go max. So there is, 94% on that for the collateral factor, and liquidation thresholds at 96%. There's a lot of people getting levered here, but for 30%, that's 28% rather. That is compelling. Would you put a lot? Would I recommend you put a lot of money into this? No, absolutely not, because it is higher risk. Because you are, you're specifically putting quite a bit of money at risk to get liquidated, especially in the event that one of them possibly depegs, or there is some sort of exploit. You just don't want to be over invested in something like this. But in general, most people are, when they look at this stuff, are going to look at stable coins, because that's where, while doing it on majors is fun, yeah, so you can see here sometimes it goes negative as well as it gets worse as you lever up. So that's definitely where you don't want to be. The prudent way to do it is just doing it with stablecoins. And for most of us in our communities, we've just been recommending stablecoins all year. Why? Because the rates have just been that good. Now this is at Fluid on Base. There are some other places that offer some better rates, but right now I don't know if taking leverage is the best idea. You'd have to be very confident in your risk curation to take a levered position that high. So there's that. Now they also have something called Smartland, where all of this is taken care of for you by a risk manager. This is using the Yo protocol for this, and you're getting a net APR of, frankly, not very much right now. But this is Fluid, really good place if you want to come in and earn some supply yield. That'd be the one thing if you're looking for another protocol to come in with and not overexpose yourself or overinvest in one protocol, because that's something we always recommend with our all-weather portfolio that we recommend with containerizing or bucket allocation specifically for your portfolio, not to overinvest. You may want to consider doing something like Fluid, which has a really good history. Is a Lindy protocol. Lindy is the Lindy effect, meaning the longer that something's in existence, you're more likely to trust it, which it is in this case. GM to everybody on my retake chat. Bellic, the only thing I don't like about Patreon, honestly, is that they take 30%. If they didn't take 30%, I would have been there yesterday. GM to Rayons, thank you for the tip. I appreciate you. And hello also to DeOne Trent. Okay, let's go back to the list. We started with Fluid, right? River is CDFI. I'm not going to cover that today. Compound, long time major. We're not going to cover that today either. But I will talk about Seamless for a minute, just to give some love to some smaller protocols, right? I'll do Seamless. Then we'll talk about Avantis, and then we'll do Aerodrome, and then we'll call it good for today. And it'll be quick. I mean, my professor's notes will be a little bit more in depth, just more with thoughts. I have specific ways that I audit protocols, and to me, and this is something you should consider as a yield farmer, I always think that protocols are high risk until they can prove to me that they're not. Too much weird shit has happened over the last 6 months, right? Really weird things. And I don't know if this is just AI getting super good, like Anthropic talked about their Red Team AI agent for smart contracts. So are we in a situation where we may need to just kind of remove liquidity in places and just wait it out to see if something happens? I don't know. Obviously, none of this is financial advice. You're definitely going to want to do your own research, but things like that. Okay, so let's go to Seamless. Seamless is a lending AMM just just like Fluid. What's interesting about Seamless is that, and I don't know if this is just because I think they have backing still from Coinbase Ventures. They were one of the first protocols to have their governance token listed on Coinbase, which is kind of crazy because they're not willing to sorry guys, just realized that there we go, my tablet wasn't charging for some reason. Yeah, they've had their governance token listed since day one on Coinbase, which is kind of rare to see. One second, guys. We have packages at the door. It's that time of year, you know. We now have a rule that nobody gets to open any packages that come through because there could be Christmas gifts, that type of thing. Looks like they've kind of pivoted from what they were. Now they're doing one click leverage tokens, which is fine. Oh, look at that. And these are all driven by this is all driven by their liquidity staking, right? So you need to get into the vaults. That's what's powering most of this leverage, right? I guess I need to connect my wallet first. Now we recommend Rabby as our wallet of choice. It's just the easiest to start with if you don't know what you're doing. I like it more than MetaMask. I just think there's just more quality of life things that are in there. The gas account's the game changer. All the gas account does is it allows you to pay for gas with stable coins. You load it up with USDT0 or USDC from any of the supported blockchains. And yeah, you can do as little as I think it's $5. I think you do less than that. I think you do $2. But it used to be $20. But they've done a custom amount now. Okay, so yeah, it's the game changer in my opinion. The ability to the fun part about this is that it actually, if you have a gas account created, this gas account balance is available to any wallet on the seed phrase. Meaning if you have 10, 15 different addresses from that initial seed phrase on there, they can access this gas account without having to worry about having gas in 99% of cases. Now you should always have gas, like native ETH on certain chains, just in case, because sometimes protocols can be stingy about it. They don't care if you have a gas account. But it also works for any hardware wallets that are also connected. So I have a bunch of different, wallets here. They can all access this gas account. And to me, until the Base app, until Rainbow, until Trust Wallet, until Phantom has something similar, I cannot in good faith recommend anything but Rabby. They also have really good they allow you to revoke. You can revoke approvals. And this is the main reason why here in this course account, why we like it, because you should be revoking your approvals pretty quickly, and you can do them in batch, cross-chain, doesn't matter where. So that's why it's great. Anyway, back to Seamless. Let's see, let's deposit into the vaults. Oh, they've definitely pivoted now because they're okay. So they're in with Morpho on these. Morpho is totally curating these. Very interesting. To be fair, I haven't touched Seamless in more than 2 years. So, but yeah, you can stake your Seam tokens. Do you get specific? Well, what are the benefits? Okay, 100% of protocol fees are directed to stakers. Okay, so it's not just a governance token; it's also an incentive token. So that's good to see. By staking, how much protocol fees slash rewards can I expect? 100% of protocol fees are directed to stakers, and any additional SEAM or ES SEAM, which is the vote escrow, the escrowed SEAM tokens, rewards that DAO governance votes emit to stakers. So if you're staking 10,000 SEAM and 3 million total SEAM is being staked, I see it's proportional. On a given day, you would earn roughly 0.333% of the total revenue generated that day. How often can I claim? Block by block, every couple seconds. So there's a cooldown for SEAM. Yeah, 7-day cooldown. I mean, you only have 24 hours after the 7-day cooldown. that's good. That's where they get you. So you better set multiple alarms if you if you decide to unstake. I mean, it's a smart way to do it, right? Um, Staking your SMUSDC here in there, 25%. That's not bad. That's not bad. Now, there's a lot of trust that you have to put into the token, right? Into the community, because we've learned good tech does not equal good coin. Simple as that. It takes more than having good tech to have a good coin. Having a good community, good governance, engaged community, people who care about incentives. This is why Aerodrome has done so well, to be quite honest, is that they've created a really tight flywheel with what they're doing. So yeah, Seamless is a little bit different now than when I remember. They have these leveraged token strategies. I have nothing in my portfolio because I haven't used it here. So, interesting. Leveraged tokens. There's only, I guess the only one on base is the one that's here. There's a supply cap. That makes sense. Correlated ETH. That's going to be EtherFi ETH and regular ETH. 17x leverage with an additional 10. And this is net, because if you look what we're seeing at here, right? You have 45% staking yield, restaking. There's a yield for that because EtherFi ETH earns yield for that within EigenCloud. And then the borrow rate, which would be, I'm guessing, on either Morpho or here on Seamless, I'm guessing it's on Morpho, is going to be 39%. Plus you get points in addition. I'm assuming the points go towards something. Is there a multiplier? Ooh. Well, I mean, that's kind of the obvious part. So in the event that something happens in a hack or exploit, if you're in this, and if your funds are in the staking safety module, it could be used to help make other people whole. Well, there's that. The new UI for Seamless. Oh, we were just there. Then why are you going back to there? Okay. That's fine. Still nothing here yet for the new protocol. I'm guessing it'll all be dark like this. That's cool. They have a swap bridge here. So it's a cross-chain swap powered by Lie.fi. They power Jumper.exchange, our preferred cross-chain swap bridge of choice. Okay, so that's seamless. They really just have, again, the vaults are probably the better. I mean, the vaults are through Morpho, which are these right here. So you would take your 5% that you're earning, bring that token back here, and actually, I take that back. You're taking your SEAM tokens, and then you would earn rewards on this here. Anyway, that's seamless. Nothing too flashy, pretty straightforward. We'll cover Extra a different day, one of our favorite protocols. Let's check out Avantis real quick. Avantis is a perp DEX, thanks to them. Got a decent airdrop. So, oh. Okay. Just going to log in with my wallet. Trade crypto and real world assets up to 500x. That's a lot of leverage. Obviously, there's things like, sure, DeFi Llama, we'll use your referral code. Gotta make money somehow, right? Fun. Yes, I know. I'm already. But you do get you get a fee discount. That is what DeFi Llama is offering you here. There are quests to get more rewards if you want to. Again, if you don't know much about perps, the best way to describe them, well, they're not necessarily options, but they are DeFi derivatives. The derivative is just a digital asset whose value is derived from another. So in this case, BTC USD, this is a perp whose value is pegged to the value of BTC. You don't actually own BTC if you buy this. You just own a perpetual whose value is pegged to its current value. And you can take up, my God, to 500x leverage on that? Crazy. Market sentiment. There will be one thing that perp dexes do have is funding rates and funding fees. So based on where the market is, to hold a long position, you may get paid to do so. Whereas if you're a short position, to help keep the balance, you're actually going to pay the funding fee however often, every 1 hour, every 8 hours that you hold the position, just to kind of keep things in balance. For example, this XRP, if you take this perp, you're definitely paying shorts on this because it's 65% long, 35% short. The idea is with the funding rates, you're going to have as close to 50-50 in terms of the funding interest here. Now, as you can see, tons of open interest here as well. I'm not going to go into that today because I'm not much of a trader, to be honest. But they have a smart wallet available. That's kind of cool. But for us, through our lens, when we're looking at something like Avantis, we're looking for ways to earn. So, in this case, you can stake USDC and earn what we call real yield, because your yield comes from 100% of trading fees and losses. Trader P&L. Stake AVNT. And again, this is, if you think this is very similar to GMX, you're right, because that's very, junior and senior vaults have been unified into one LP vault. Well, let's look at you, buddy. 14.19%. Again, all I have is USDC. And what's nice is that they're going to tell you your estimated APY and your estimated annual yield. This is still better than my savings account. Not saying that this is a savings account. This is actually a real yield account. So what you're doing is, by staking your USDC, you are backing the house specifically. And as money comes into the house, and you'll know exactly what that comes from. It comes from people making trades, people opening accounts, people closing accounts, people getting liquidated, people paying funding fees, back and forth. All of that comes back to people who are staking here in the LP vault. Now, what's interesting is that they're paying 100% of fees to people in this vault. You go check out JLP, they're doing 75%. You check out GMX, they're doing 70%. If I'm not mistaken, the where your rate goes into every hour. Looks like it's coming out for distribution. And it looks like the revenue is actually in terms of fees. Whereas with Jupiter and some of the other perp dexes, it goes into the price of the actual asset, which in this case is AVUSDC, is what you're buying into. So you would hold AVUSDC, and then you would earn additional yield in USDC on top. That's interesting. Right, because you're staking it, you're coming in with a stablecoin, as opposed to like GMX or Jupiter. You're buying an actual token that's a representation of the vault itself. Cool. And that's Avantis. There's nothing too complicated about perp dexes. It's a trading floor, and you have the ability, whether you're on GMX, Hyperliquid, Avantis, Aster, Drift, anything else that's coming around. There's a trading floor, and then there's a whole liquidity spot, hopefully, where you can earn off of the behavior of other investors. That's something we love to do. Okay, let's head back up the list here, because I'm almost at an hour, which is really all I wanted to do today. We'll talk about the largest DEX, and that's Aerodrome. So Aerodrome is the easiest way to get your token listed on Coinbase.com now, because anything that is available on Aerodrome is available, for the most part, on Coinbase.com. That could be a good thing, specifically for base projects who are looking to drive liquidity. Aerodrome is a very interesting model. Now, take everything I say here with a grain of salt. Definitely, I would recommend you bookmark the Web3 version of this. They had some issues with the front end getting hacked 2 weeks ago. So aerodrome.finance, aerodrome.box, velodrome.finance, velodrome.box. Don't use anymore. Use the Web3 versions, which is aero.drome.eth.limo, aero.drome.eth.link. Same thing with Velo. They are the same protocol. Velodrome is the OP superchain that's just started out on Optimism mainnet. Now it's the official MetaDex for the entire superchain base. Obviously, leaps and bounds bigger than Aerodrome than Optimism. Aerodrome is now going to be the main brand. They're working to unify them all into one brand called Aero. Aero will now expand also into ETH mainnet, which is a new thing for them. I don't think I've been on... Yeah, I haven't been here with this wallet yet. As you can see. Sign in. At the heart of it all, Aerodrome it's a swap. It's a DEX. It's also an AMM. A lot of the different pools, the liquidity is really the feature of what you're looking at here. I'll be very honest. You have to know your stuff to do well in this system because they have specific parts of their flywheel that are difficult to comprehend. Okay? At its core, from an AMM standpoint, from a DEX pool standpoint, Aerodrome has two types of pools. They have what are called basic pools, which are regular LPs where you have to come in with 50% in each asset, and they're done in the old XYK Uniswap v2 liquidity pool, where you're going to be providing coverage for the assets across the entire price curve. That's the basics. That's still around. That's not going anywhere, mainly because these are smart contracts and there's still tons of money in them. I mean, there is still tons of money in these pools. In the basics. Right? Which means they're not going anywhere. Now, they also have concentrated liquidity pools. This whole system is what's called Slipstream. It's also on Velodrome. You're more than welcome to look into the docs for this. I'm not going to go too deeply into them because, well, it would take me probably another entire hour to talk about how this all works. All that you need to know is that most people prefer the concentrated liquidity because you have a better shot at better APRs, mainly because you're providing liquidity specifically within a price range between the two assets that you have here. So with ETH CBBTC, it's within a specific range of prices between the two assets specifically. Hard to know exactly what that is, just at face value for two directional assets, but if you do it against a stablecoin, it makes more sense. For ETH USDC, concentrated liquidity, XYK, the older one, you'd provide it over the entire price range from 0 to infinity. Here with this, you can specifically say that, let's say ETH right now is a $3,000. I only want to provide liquidity for this pool between the price ranges of $2,750 and $3,300. The reason you'd want that is because the way that this works is that if you are providing liquidity in an active range, you'll receive a portion of the fees that are swapped between the two assets. What's great about that is now you can farm for greater than 10%, in this case 1,615%, and you'll earn both ETH and USDC, which is amazing. It's amazing, right? It's a great way to earn your blue chips. Doesn't necessarily work that way in this level, but we'll talk about that in a second. So this is Slipstream. This is their concentrated liquidity manager. Now they do have automated autopilot stuff here as well. So if you just want to set and forget, that's certainly something you could do. Now, the reason why people like being in Aerodrome much more over Velodrome is because of the way that the incentives work. Now, as long as you're within an active bin as an LP staker, you're going to earn some of the fees. Not a ton. You're not going to earn 1,615%. The emission APR, with regards to how fees work, is that they go to voters of the pool. Now, to vote, you have to go to a lock. And you normally you'll be locking the Aero token. That is the actual governance and emission token for Aerodrome. Velo is the one for Velodrome. You'll receive what's called a vested equity or vote escrow token, VE Aero, for locking in your Aero. Now, the timing on this matters. If I have 1,000 Aero and I lock it in, let's just say I have 1,000. For 4 years, I will receive roughly about all of it. Estimated voting power. If I go for 3 years, I'm only going to be able to unlock 75% of that voting power. 50% for 2, and then 25% for 1 year. Don't even ask about 7 days. From there, you'll receive your VE arrow, and then you can go and you can vote. And as I mentioned before, from a liquidity standpoint, not only do you have to stake in that pool to earn that 1600%, you also have to vote for that pool. Now, you don't have to vote for that pool. You can. You don't have to. Because they also have a secondary economy here for voting. These are what are called bribes for incentives. This is a model that was made famous from convex finance. If you know convex, which is the yield optimizer to Curve on Ethereum mainnet and other blockchains. And the reason why Arrow and Velo are, I think, a lot more unique is because they've taken that two protocol, having the liquidity and then the optimizer, and they've put it into one, along with the bribes and the voting and all that. It creates a really tight flywheel. The reason how these work the best is if that they're the top DEX on the ecosystem, because that means everybody is contributing to it, and they are. I mean, they are by far the largest DEX on Base. Fluid is kind of in the mix. Uniswap also in the mix, but they don't have incentivized voting, whereas Aerodrome does. It's based on what are called epochs. An epoch is just a measure of time, 7 days here every week. Pardon me. And voters get to decide where all the incentives going, because there's going to be incentives being put in by protocols, by the DAO, all kinds of things. So you can actually earn a vote APR in addition to your staking APR. But know that in concentrated liquidity on Aerodrome and any of the Slipstream protocols, 100% of all incentives go to voters. So if I want to go with that ETH USDC pool I was just talking about, if you want to get a sniff of that 1600%, you're going to want to vote for this pool, as well as stake inside of it. Now, that begs the question. I locked it in for 4 years. When will I see return on my locked Arrow? You'll be surprised. You'll make it back within 4 years. Because, again, not financial advice, do your own research. The reason for this is there are way too many people with tons of money in this protocol. Coinbase Ventures, 2023. Pantera, a whole bunch of others came in and bought truckloads of Arrow. So they are invested in this ecosystem. I think this is now year 3. Yeah, at Endeavor will be year 3. They have easily made back their money by this point. Obviously, the more you have, the more you'll make back because of all the incentives coming through. If I just go to liquidity here and we look at concentrated, now we just go by volume. ETH USDC here, not that pool we were looking at. This one and the CBBTC pool have been fire emoji as we put them on our Beacon Spotlight for the last 3 months, meaning that their rate is higher than 9,000. Look at 216K, 96K. The question you're first going to ask is this sustainable? No. But your best shot at getting in here is staking in the pool and then voting for this. You should get a decent amount. As you can see from a fee standpoint, that's how much they're making every epoch, which is every 7 days. It's being distributed back amongst people who are liquidity holders. This is where the flywheel starts, right? And this is why most people stay in Aerodrome. Well, first, they don't have much of a choice because they're locked in for 4 years if they want the max voting. But there you go. I will say, no disrespect to Aerodrome, staking in this protocol is a pain in the ass. Which is why, if you go to a yield optimizer, which are on top of this, even somewhere like Extra Finance, Beefy, VFAT, wherever else, Aperture, it's a much cleaner experience. But you're not going to make the same yield because you won't be here earning the same rewards in the flywheel. You just have to accept the fact that you're eating 4 years of Arrow token to get in and just start earning tons of incentives. The fact that Base is such a large blockchain now and this is a good chunk of the revenue that's coming through, I mean, honestly, it's a bit of a no-brainer. We'll see what the Arrow move looks like, because they now have to reissue the Arrow token. People who apparently are in Velodrome are earning more Arrow than, from a ratio standpoint, than people that are in Aerodrome for Arrow, which kind of makes sense. Not really, but it is what it is. You can talk to the team about that. But anyway, kind of the foundational basics of some of the professor's notes that are out there. Okay, so giving you a little bit of a sneak peek of what you'll see when you sign up, buy some token, pay for the fan pass, whatever. You just get my thoughts on as many of these protocols as possible, right? So if I go back, I mean, we're talking about hundreds of protocols here. And if you don't want to do the research, that's fine. Leave it to me and my devices to get you thoughts and takes and analysis. It includes some stuff from my friends, multiple contacts and multiple protocols here in multiple ecosystems, to give you my thoughts. I'm not going to necessarily grade things just yet. Something I've been considering, but there you go. Hopefully you found value in that. So to answer the question from Frank Ocean, does it really matter? I mean, I don't know the context specifically, but does DeFi really matter? Yes. Because I still believe in my heart of hearts that DeFi is the future of finance. It's the future of how we'll be doing business. The new world economy is going to be powered by a lot of things with DeFi elements. Are we early to this? Yes, absolutely. Which is why you should never be completely overinvested. Again, my company Beacon DeFi, we have plenty of free resources you can check out. Link is in my Flix.fun. If you go to my Twitter bio, you can see my creator homepage. That's at Flix.fun. That's C Soriano. I need to work with the team to get more of my 24/7 streaming stuff up there. But it's really good way to get some discoverability. You can access Beacon DeFi's website as well as the videos we have from here. So again, would love your support. That would mean a lot to me. Feel free to buy the creator coin or buy my streamer coin on Retake. Either way, you're helping me keep the journey alive, now in year 5 here in the DeFi space, doing this full time as my career. So obviously I thank you personally for supporting my journey and trying to help onboard the next million people, whether it's into Base, whether it's into Solana, whether it's into Arbitrum, Optimism, ETH Mainnet, Hyper EVM. I can keep naming blockchains, but I'm not going to. I've seen a lot of things in this space, guys. I still think this is all going to flourish. The one thing that's great about DeFi is while everybody is sitting here in shock with the market, we're just grinding out yields every single day. Which is why we've been talking about stablecoins for the entire year, because people are getting chopped to death out there, guys. Perp dexes are great. You may get a great airdrop from here and there, but you're getting chopped to death. It's just kind of the nature of how this year has gone with Trump in office. But stablecoin yield's been great, and we've got a lot of people just grinding out stablecoin yield, doing really well. So again, if you want to learn more about that, want to get personal mentorship, you can obviously buy some of the coin. We also have Beacon DeFi. We have paid offerings for that specifically with our mastermind and our Beacon Challenge stuff. So tomorrow I'll be back 1 p.m. Eastern for our weekly Beacon DeFi podcast. It's called Total Value Lock, TVL, the TVL podcast. Working on getting a couple of panelists on. If you know anyone who'd be a great panelist, please let me know. We'll talk about DeFi. We'll try and educate our group on the news, and we'll introduce you to some new communities. So working on a panel right now. Should have that finalized and tweeted out very shortly. So with that said, take care, and will I be back later on for shenanigans? Maybe. Probably. See you later. Have a great day, guys.